Hello everyone and welcome to another episode of Property Talk Live. So today we'll be talking about a topic that everyone already knows is not new, and that topic is why most property will never increase in value in real estate. So let me start with a statement that might surprise most people, and that is that not every property you see is a good investment. Let me say it again. Not every property increases in value as we all expect. Not every land becomes profitable. Not every house creates wealth. And this is where many people make expensive mistakes because a lot of people believe one dangerous thing, and that's that if I buy a property and wait long enough, it will appreciate. That sounds nice, actually. But some property grow massively and others stay stagnant for years. Some even lose value over time. So today we're going to break down the real reason why some properties appreciate and why others will never really grow. Because once you understand these concepts, then you stop buying emotionally and you start investing strategically. So one of the biggest lies that people believe about real estate is just buy anything. It will eventually appreciate. Like just go ahead and buy, be it a land or a house, and then it will appreciate. But when it comes to real estate, it's usually not the truth. That's like a very, very big lie because growth does not happen automatically. It's a value that's created by specific factors. There are so many factors that you need to look out for. And if those factors are missing, the property may remain almost the same for a very long time. Some people bought land 10 years ago and the value of that land barely increased. It has barely moved. And others bought property in the right location and they saw massive growth within few years. So what's the difference between these people? It's not luck, knowledge, or positioning. It's actually understanding the market. So a property does not grow because it exists, it grows because of the demands. If the demand grows, then the property will grow as well. So and that's one of the most important things that you must understand when it comes to real estate. So going deeper, we know that the location is not enough. Just knowing the location of property is definitely not enough because people always say that location is everything. And yes, location matters. But here's the problem: most people misunderstand location. They think location only means buying a popular area, and that's absolutely not true because that's like an incomplete thinking. Because some popular areas are already saturated, and some expensive locations have limited future growth. So the real question is not is this location popular? It's actually you should be asking if the location is growing instead of asking if the location is popular. Because growth is exactly what matters in real estate. Infrastructure also matters, accessibility matters, commercial activities also matters, and the future development matters. Population movement matters a lot in real estate too. Because the smart investors they do not just buy where people already are, they do not buy where it's already loud and saturated. They buy where people are going. And that's exactly how the appreciation happens on their land. Another issue is buying based on hype. That's another dangerous mistake because everybody is talking about an area. Once they see something, the person tells, "Oh, I bought a land in this area, and the area is very good." They'll be like, "Okay," and blindly without doing their due diligence and their own research. People post videos online, and then when people see, they feel like, "Oh, the location looks nice from the video," and then they just rush there to buy the real estate, and then before you know, everybody start buying. When people hear, oh, this place is the next big thing, is the next area that people are going to, before you know, people start buying without asking proper questions. But the hype is not the strategy because some areas become overhyped and then the price will increase very fast. The supply also increases and eventually the growth will slow down because it's already popular. There's no major infrastructure they want to do on those areas anymore. But some investors actually do their own research. They do not just follow the noise. They will ask questions like, what's driving growth here? What exactly is driving the growth here? Is there actual demand? Is infrastructure improving here? Is development sustainable? Those are the questions you hear them asking because excitement alone cannot sustain property value. The infrastructure itself creates the value. So now let's talk about one biggest driver of appreciation, and that's infrastructure, like I mentioned. Roads, bridges, commercial centers, airports, schools, hospitals, government development, all of these things, all of these growths done by the government, they change the value of a location anywhere at all. Because infrastructure attracts people. When people can easily locate these things, these facilities in that area, then they'll be very, very interested in buying land or houses in that area. And then when people move, the demand of that area will increase, and before you know it, your property will begin to appreciate. And that's exactly why some areas suddenly explode in value, because before the value was very low, and then before you know it, the value just increases because of those infrastructure that were planted there, not because of magic, but because development entered the environment. So infrastructure also creates movement, and then movement creates demand, and demand creates value. So before you know it, if you're buying a land that kind of place, your money will increase. And that's exactly how investors think, smart investors actually. They study the development pattern, they position themselves before the crowd, and they benefit high from the real estate. So another thing people do not really talk about is the problem of oversupply. That's something that many people ignore, oversupply. Because sometimes too many similar properties enter the same market, and then before you know it, there are too many apartments, too many empty buildings, too much competition. Even when the supply becomes too high, the growth will still slow down, because there are too many. It's already overpopulated, and before you know it, the rental income will weaken, the growth will slow down, vacancy will increase, and before you know it, that type of place will become empty, because there's nothing that excites people there anymore, and the appreciation will become difficult, because if there are no people to use that place, then there's no way you expect growth in such areas. So the investors will actually ask themselves that, what does that area actually need? Is the demand stronger than the supply, or will that investment still be attractive years from now that they are about to buy it? And then they think about these things strategically. They do not come up with these decisions or questions emotionally. They talk very honestly, because most people buy properties emotionally. They buy because the property is fine, it looks very, very beautiful from afar. There's luxury finishing, nice design, good packaging and all. But beauty alone does not guarantee the appreciation of that building. A beautiful property in a weak location, it will struggle, because there's no way you'll be able to maintain it, because you do not make proper plan for that property. So also, a simple property in a high growth area may explode in value, and before you know it, will be getting more value than that beautiful house in the other location. And this is why people that are investing smartly in real estate, they focus on the growth potential, the demand, the accessibility, and the development plan of any area they're about to invest in, not just the appearance. Because a good looking property is not always a good investment. You need to do your due diligence and ask necessary questions before you know if it's something you need to invest in or not. So, how do smart investors identify high growth property? That's a very, very important question. How do they identify properties with strong potential, appreciation potential? They study the development. They look for new roads, government projects, commercial expansion, population growth. Factors like that are what they look out for before they decide to invest. And then they position themselves early. They buy before the area becomes expensive, not after. Why everyone is still rejecting that area? That's exactly when they go into the market and then buy that area. They follow the demand. Where people are, where are people moving to? Where are business expanding? Where are opportunities growing in this area? Those are the things they follow before they buy from that area. And then they think long term. They are not thinking to buy today and get their profit next year, buy today and get their profit next month. No, they ask they ask about the value of that land is worth today. And then they look and calculate what the value of that land will be in the next 5 years based on those developments in the vicinity. That mindset alone will change everything. It gives them it gives them it makes them to think strategically and then make their decisions properly. Because the real secret of appreciation in real estate is demand growth. The more people demand the more people want to go to that area and want to move to that area, the more the property will continue to increase in value. And that's just it. The demand grows. If the demand rises, the value will rise. If the demand stays weak, growth stays weak as well. So smart investors focus less on the hype and then more on the future demand, because the best investment are often obvious too late. And that's exactly why positioning matters. Like we always say, positioning matters a lot in real estate. So I'm going to leave you with this, which is not every property is a smart investment. And buying property without understanding appreciation, how property appreciates, can trap your money for years, for longer than you think. And before you know, you eventually lose money. Because real estate is not just about buying randomly, it's about understanding the growth, the demand, infrastructure, timing, and positioning. So the question is not, can this property appreciates. But the real question should be, what exactly is driving the future demand of this property here? Because once you understand that, you stop chasing the hype and then you start to build real wealth. So I hope that with these few things I've explained, you understand now why most properties do not appreciate in value, and then why some properties appreciate in value, and also how to position yourself when you're investing in real estate, especially in new sites. So thank you very much for joining us for this session today. I hope that you'll be able to learn one or two. So if there's anybody that knows that is about to invest in real estate, please tell them to watch this video. You can share this video with them so that they can watch and learn. So thank you very much, guys, for joining us for today. See you next time. Bye.